Hey, good morning. Let me give you some backstory. Back in May, I put about a little under $700,000 into my Bus 13 portfolio. I had built two AI agents, Samantha, who is an analyst, and Bart, who is a researcher. And I decided between the three of us, Samantha, Bart, and I, we were going to manage that roughly $700,000 and see what we could do with it with the use of AI. Jensen Wong had told me that I would have an AI agent sometime in the early part of 2025. And so I set out and built them, and we set out to do what we can do. So our $700,000 grew to on November the 1st, 6 months, it was up to $1,550,000. And so I thought, wow, we're off to the races. Things are going well. Well, over the last 2 days, I lost $100,000. So it's down to about 1.45 million. So I'm asking myself, is this the bubble everybody talks about? I don't believe there's a bubble. I don't think there will be a bubble. I think this is just a build out, much the same as the internet had a build out, and Cisco stock went skyrocket, and then it crashed once the build out was over because there was no monetization of the of the Jesus of the internet. That being said, is there a monetization of the AI, and is this a similar bubble? I don't think so. So what is happening? Why did I lose $100,000 over the last 2 days when I have what I think is a outstanding portfolio? Well, it's all about valuation. Yesterday, I saw on the news that Michael Burry of the fame of the movie The Big Short has come out and said he was shorting Palantir. And the news was all full of it that, yeah, but Michael Burry has been wrong numerous times. I don't think he's wrong this time. And it's not because Palantir is not a good stock. It's an excellent stock. I missed it. I didn't realize how good it was. But the fact is, it's out over its skis, as is a number of stocks that their valuations have just got out of line. What I do is when a stock has a earnings report, I access that earnings report. I access all the information that I can find on the internet on that evening, and I give it to Samantha, and I say, now reanalyze that stock. Well, last night I was up quite late because I can't access the analyst report usually until about 9:30 in the evening from my source. And so I analyzed last night AMD, Advanced Micro Devices, ALAB, that's Astra Labs, and Supermicro Computer. There's another one, but I haven't gotten to it yet. I went to bed and didn't do it. So of those three stocks this morning, two of them are down, one of them is up. And the interesting thing is, based on my analysis, and my analysis basically says what is the price going to be 3 years from now, the first of January 2029, relative to the price today. And the one that is going to show the best growth between now and January 2029 is the one that's down furthest today. And the one that is up today is the one that's most overvalued. Now, what do I mean by overvalue? It's a reflection of the PE ratio, price to earnings. And the way I like to think about it is based on the price you pay for a stock today, how many years of earnings would have to come your way in order to offset that price. And to give you an example, Palantir's earnings, our PE ratio is 261. So if you own Palantir stocks, and if rather than them investing the earnings in the company, they sent them to you, it would take 261 years to of those earnings to equal the price you pay for the stock today. On the other hand, Supermicro Computer, the PE ratio is 18. Um, Applied Astrolabs is 113. To give you some relevance, I believe NVIDIA is about 45. So the PE ratio will tell us that maybe this stock's a little overpriced. And that's what I think Michael Berry is saying about Palantir. It's a wonderful company, and its revenues will continue to grow, and its earnings will continue to grow. But the reality is it's overpriced right now. And that's why I believe he is shorting it. As I said, I don't own any Palantir. I have no skin in the game. That was my mistake. When it was 19, I thought it should go to 10, and instead I think it's up around 200. But that's water over the bridge. So with that in mind, what do we do? Well, the first question the way I approach the stock market is I like the phrase "follow the money." Stock can only go up if there is enough money behind it to push it up. If the investors have no money, and if the companies have no money, the stock isn't going to go anywhere. But that's just not the case. There's about 4 to 7 companies that have openly said they're going to spend $7 trillion between now and January the 1st of 2030 on building out AI. Now, what exactly does that mean? That means that they need the compute power to achieve the growth opportunity that they foresee for themselves. And let's bring that down to Microsoft. No, let's bring it down to Facebook, what some people now call Meta. Mark Zuckerberg has committed that he is going to spend, I think it was in the next year, $400 million on AI. And what does that mean? That means he's building data centers or accessing data centers so he can access the compute power that these data centers can give him so that he can improve the profits of Meta. How will he do that? He will invest in better advertising numbers. He will create a program that if I want to advertise on Meta, he will target my market exactly for me because he has the compute power to identify who is Kerry's market. When does he come on to Facebook? And what does he react to? What kind of video do we have to put in front of him? Or what kind of words do we have to use so that he will go to Kerry's landing page and sign up for $60 to have access to his knowledge? That's what Mark is betting on. He's also betting that he can entice you with his virtual glasses, that you don't have to go to your phone to find out what your stock is selling for. You would just ask your glasses, and your glasses will show you a chart and whatever you want and tell you everything that's what Mark is spending his $400 million on in the future. And if we believe that Mark knows what the hell he's doing, we need to invest in him. But in the interim, Mark can't do that on his own. He is an advertising company. He's a social media company. He needs someone to build servers to put in his data centers, and then he needs the communication. If he's got 2 million servers in a data center here and another million over there, they have to be able to communicate with each other. because I'm going to come and ask a question about a product I want, and Mark's got to be able to give me the answer immediately. And that's going to involve a whole host of servers, and they got to be able to communicate with each other. And then they have to be built such that they continue to run efficiently, they don't overheat. So Mark needs other companies to achieve his goal, and he's willing to spend the money to do that. And that's why my portfolio went up 124% in 6 months, and then pulled down because the market said some of these stocks are overvalued. Now they don't always get it right. As I said, I last night I analyzed AMD, ALAB, and SMCI, and I said two of them are down and one of them is up, and the market got it exactly wrong. The one that is up should be down because it's overvalued. And if you'll listen to the podcast that I created it's on my tell sheet. You'll listen to the version of the podcast and you say, "Oh my God, this company is increasing their revenues by 50% a quarter," and then at that near the end it says, "Yeah, but," and the "yeah, but's" what you need to know about, and it's the same "yeah, but" that applies to Palantir. They're out over their skis. So if you don't know that and you react to, "yeah, but their revenues are growing at 50% a quarter," you'll get it all wrong. You'll be there when the company is strong, but they're overpriced. And that's what we need to know as investors. Um, you know, I was guilty of this. I got involved in the facade of genome sequencing and genome editing, and that I was going to put a needle in my arm, and all the potential for cancer, which is prevalent in my family, would go away. Yeah, but CRISPR doesn't control its own destiny. It's controlled by the Food and Drug Administration. It's controlled by the insurance companies. If they don't say yes, the answer is no. And so all this excitement that I had 2 years ago about genome sequencing and genome editing just collapsed because there was nothing behind it. There was no earnings, there was no revenues, there were no growth, there were no profits, or there were no gross profit, gross margins, or operating margins in the equation. So the stock just collapsed. So you have to know these things if you're an investor. Now, if you're just playing in this and saying, "Okay, I'll just take I get some bullshit on this of that you're just a salesman. You're just coming here on YouTube. Go away," they tell me. "Go away. You're a salesman and YouTube's about getting free information." Okay, if that's what you want, that's what you're going to get. Someone else's opinion. But in this world today, what pays dividends is knowledge. And if you don't have knowledge and all you have is opinions, you don't have a seat at the table. And if you don't have a seat at the table with knowledge, you're on the menu. You're going to be eaten alive, just like you have been in the stock market for years. But that's changed. I have access to the data. I have to pay for the data. I have to pay a monthly fee to get access to the data so I can give it to Samantha to analyze. That costs money. I have a support staff. That costs money. If you don't want to pay money for education, go meet Kevin. Go talk to Graham. I want to educate you. There's only 4 ways to get wealthy in this world that we live in today. One is to become an entrepreneur. That's what I'm doing. That's what Jeff Bezos and did in a garage in the state of Washington. He adapted to technology, and he put Sears Roebuck out of business because he adapted to the technology. That's exactly what Sergey Brin and Larry Page did. They put the library out of business because you can now find out anything you want to know on the internet. It's adapting to the change that is upon us. And right now, the change that is upon us is AI, artificial intelligence. That's said a different way, all the knowledge in the world. But you've got to be able to translate that knowledge and interpret it. So, AMD down to 2.3% with a PE ratio of 63. Been up and is up 155% over the last 6 months. Astrolabs, ALAB, up 2% today. A PE ratio of 113. What? I got to wait 113 years to get up 155% over the last 6 months. And Supermicro Computer down 7% today. PE ratio of 18, up 62% over the last 6 months. So which is the buy, which is the sell, and which is the hold? You've got all the information you need right there to make an informed decision. Now, tomorrow there will be 4 more stocks that I will analyze, and I will share with my tribe in the form of a podcast that it will explain why ALAB is such a phenomenal company and growing their revenues at such a phenomenal rate, but you need to sell. I'm Kerry Grinkmeyer. I'm a retired financial advisor. I've been asked by my tribe every morning to come on and tell you what's on my mind. I don't really ever know what's on my mind until I come in the morning or the evening before. So if you find this information helpful, show up every morning. If in fact you want to become a millionaire, go to the link in the description and find our website and sign up for $60 a month. I'm going to limit it to 1,000 people because if everybody has access to the information, we lose our edge. Have a good day.